Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to be taking a look at gold as we are looking to see if the price is going to break out in either direction. Now, the reason I'm saying that is that gold hasn't traditionally followed sort of trends recently. We've seen the price of gold kind of bounce between two major support levels, probably around about this 1750 and around about 1870s. We've also seen it kind of being used as a hedge against the rise in inflation in the US, but also now we've seen a lot of selling involved with the market due to the fact that the US might start to hike rates, and it's really interesting market at the moment. There's no real clear direction out of it, so that's why I'm saying that this could break out in either direction. I'm actually favouring a little bit more to the upside than the downside at the moment, but it's also going to depend on the risk sentiment in the market, I believe. And at the moment, we're seeing the market more in a bit of a risk on, which is keeping gold prices low. And we're also seeing that the dollar is remaining fairly strong at the moment. Now, if we look at it from a seasonal point of view, gold does typically rally this time of year. We've talked about this quite often, the fact that if you take a look at this seasonal heat map that you see gold here, you can see that it usually rallies this time of year. That's largely due to the fact that the dollar index usually falls in December. So that adds a little bit more to the fact that the gold prices could push higher. However, fundamentally, it's a really interesting situation at the moment. We've got the Fed announcement this week. They're going to announce rates this week, and it's likely that they're going to hold rates the same, but it is more likely that they're going to start announcing increased tapering measures and whatnot. So it's going to be really interesting to see how the market takes it this week. Now, what's interesting even further is the price action on the chart at the minute. If we look at this weekly time frame, we have this really low ranging weekly candlestick. Now, you know my feelings around low ranging candlesticks on gold. If you see them, it usually does lead to quite an impulsive move afterwards. And a couple of examples looking back through here, we can see that we had our most recent low ranging candlestick saw some aggressive selling to the downside. Prior to that, we had this one in here, which saw some aggressive bullishness. So the last kind of few candles that have formed the low ranging weeks, we've seen quite a significant breakout. Now, what I would be interested in further is how price breaks out of this move. Is it going to break out to the high side of this weekly chart, or is it going to break out to the low side? Now, obviously, there is a lot of risk in the markets. There could be a lot of volatility in the markets this week. That's why I'm favouring gold as a bit more of a mover to the upside, as investors may look to buy gold in line with this volatility. And what we could expect to see is a breakout of this high. And if we are to see a breakout of this high and the market impulses to the upside, we may see gold back at sort of around about 1840 by the end of the week. So, going to be interesting. How can we potentially trade it? Well, if price does break to the upside, what we will see on a 4-hour time frame is a break in this trend. And obviously on the 4-hour time frame, you get a lot more detail, and you can see that price is pretty much consolidating. We've pretty much just been moving sideways, and if price was to break out of this sort of high at 1793 just through there, what we could look for is the retest on the structure and then look for long opportunities, basically looking to target this sort of 1850 area or 1840s up here where we saw that aggressive selling in the market. So keep an eye on gold. Could break out either way. I am favouring more to the upside. If it does break to the upside, then we can look for some long opportunities. A little bit of risk to the downside if the dollar does strengthen significantly, if Federal Reserve Chairman Powell announces more than maybe 2 rate hikes to come next year to try and fight the rise in inflation. That could be quite a positive for the US dollar and we could see gold prices fall a little bit due to that. If not, however, I think that we could see a bit of a breakout to the upside in line with the seasonals. So thanks for watching this video update. I hope you enjoyed it. If you did, leave it a thumbs up. Subscribe to the YouTube channel to watch some more of our Forex content, and I'll speak to you in the next video.